Well, as the calendar has turned 2023, let's dive into what we can expect to see throughout the new year, starting with the chances of a recession or a near recession coming at some point. And I mean, this is something that we've continued to discuss with economists that we've had on our show, market strategists, portfolio strategists, in terms of what we're hearing from some of the banks right now. And one thing that really kind of stuck out to me was what Deutsche Bank is actually saying. S&P 500 rising and hitting 4,500 in the first half and then falling in the third quarter by 25% here. It just goes to show that this could be a very volatile year that ends up either just net even or net lower at the end of the day. But it's a larger question of, could you see an actual declining year after the declining year that we saw in 2022?
It'll be a fun third quarter for us if that in fact happens. But on the other side of it, you have BTIG, Jonathan Krinsky. He's their technical analyst over there, highlighting the thesis. I would say that's contrarian, Brad, because the thesis is that stocks rebound in the second half of the year based on the Fed potentially pivoting on rates in the middle of this year. So the first half might be challenging. Second half might be a recovery here. Again, that's BTIG, their technical analyst weighing in.
Right. But when we talk about the expectations, right, whether it's a two-track year that's front-loaded or back-loaded, the broad expectation is that there will be some kind of anemic recovery when all is said and done on the year. And as we've talked about before, this is sort of one of the more telegraphed recessions in memory, right? That even the firms that don't expect a recession certainly expect us to sort of come up to the edge of it if we don't technically enter a recession. So those sort of consensus views are quite interesting. That fixed income view is also really interesting, right? That almost everybody we talked to has said fixed income is going to come back in 2023 after what has been a losing year for almost every asset class, but notably stocks and bonds together, which is unusual. So, there's always a little bit of a danger when something is super consensus. Yeah. But it's interesting as we go into the year that we do feel that things do feel that unanimous almost.
Yeah, I'm also watching another list. I think this was from Evercore. There are babies in the bathwater stock list. Of course, that's a long-time stock market saying stocks. They're highlighting that were sold in December for tax loss purposes that might be bought back in the early part of this year because of the potential for strong earnings growth. Tesla is on that list, believe it or not. Not an interesting start to that thesis for Tesla today. Snowflake, another cloud play. Datadog, cloud play. And Cloudflare, another security play. So a lot of tech names that if you are trading this market, you might want to put on your watch list to see if these names that were dumped last year aggressively, if they are bought back in January.
You know, one thing that's going to be interesting to track as well is just the amount of financial fatigue, whether that be on companies' balance sheets and trying to manage through some of their own cost reductions or cost restructuring, or even at the household level. And you think about consumer sentiment, and we're probably going to get a little bit more in terms of the projections once the National Retail Federation has their conference that typically takes place in the first or second week of January. I think it's the third week this year. And so once all that starts to come out and we get this idea of where the consumer sentiment, for the amount of time we've been talking about a recession and for the holiday season that we've seen consumers have to wade through and try to manage their own finances through as well, it'll be interesting to see how much of that is continuing to go back into the economy and on corporate spending as well, because that's where we were still waiting for so much of that to come back in, even to the travel equation and leisure and hospitality that has been so battered. And so you've got it kind of on two folds, on the economic front in terms of the employment situation and where some of those dollars continue to still flow back into the economy.
Yeah, I was on recession watch for New Year's Eve. I was out. There was really nobody at the bars. What was going on? I know. I'm on Long Island. Yeah, look, I went to 4 different places. Places were not that packed. So a lot of beers in order, not a lot of expensive espresso martinis. Just a little observation by me out and about. Yeah.
Although you were out.
You were out. Was crowded.
You got to come to Brooklyn next time.
Maybe I should, because there was missing people. There was no people.
I was at home.
You were at home.
So there were not beers being bought.
No beers. Just Heritage cereal, right? Heritage Flakes?
Heritage Flakes. Not on New Year's, but yes, other times.